I'm Andrew Murphy, Co-Chief Investment Officer at Winthrop Wealth. Welcome to our first quarter 2026 market review and outlook. In this video, I'll walk through the volatile start to the year and how the US-Iran conflict and rising energy prices have impacted both equities and fixed income. I'll also share how we're thinking about the current environment and briefly revisit our long-term investment philosophy. Please visit our website at winthropwealth.com for more details on our total net worth approach to wealth management, which combines comprehensive financial planning with a disciplined, long-term investment process. Let's start with what drove markets in the first quarter. In late February, airstrikes on Iran disrupted global energy markets. Shipping through the Strait of Hormuz declined sharply, and oil prices rose by more than 50%. That increase in energy prices had ripple effects across markets, pushing inflation expectations and interest rates higher, tightening financial conditions, and increasing volatility across both fixed income and equities. The key question going forward is how long this lasts, as the duration of the conflict and elevated energy prices will be an important driver of growth, inflation, and interest rates. In our recent client question, we looked at how markets have historically responded to geopolitical events. While these periods can create short-term volatility, the data shows markets have typically recovered over time. This reinforces the importance of maintaining a long-term perspective, rather than reacting to short-term headlines. Turning to equities, the S&P 500 declined about 4.4% in the first quarter. Under the surface, there was meaningful dispersion. The Magnificent Seven all declined during the quarter and accounted for the majority of the market's overall decline, as investors reassessed the pace and returns of AI-related spending. At the same time, leadership broadened. Mid and small cap stocks outperformed large caps, and value outperformed growth, supported by strength in energy due to the rise in oil prices. Reminder that we construct diversified portfolios and tilt toward the areas we believe offer the most potential benefit, with the goal of delivering more consistent and less volatile long-term results than relying on a single asset class. Turning to fixed income, interest rates moved higher across the curve during the quarter, with the 10-year Treasury yield increasing to 4.32%. Elevated energy prices pushed inflation expectations higher, which led to upward pressures on yields. As a result, the Bloomberg Aggregate Bond Index was down slightly. We'll also note that bonds did not provide much ballast during the March sell-off, as both stocks and bonds declined together due to the rapid increase in interest rates. While periods like this can be frustrating, maintaining a long-term perspective is important, as we still expect solid returns from intermediate-term bonds, as the yield to maturity is now 4.6%. Looking ahead, our short-term outlook remains measured. Coming into the year, we expected volatility, and that's largely what we've seen. Market declines are a normal part of investing, and what matters most is how investors respond. Historically, periods of weakness have been followed by strong returns and a high likelihood of positive outcomes. Despite the recent sell-off, earnings estimates remain solid, valuations have become more reasonable, and some signs of froth observed earlier in the year have begun to moderate. The key factors we are monitoring include the path of the US-Iran conflict and energy prices, the transition to a new Fed chair, emerging signs of stress in the private credit space, and the continued development of artificial intelligence. In this environment, we believe it's important to remain disciplined, continue rebalancing toward long-term targets, and take advantage of opportunities as they arise. As always, our goal is to put our clients in the best position to achieve their long-term objectives by staying disciplined, opportunistic, and diversified while striving to mitigate fees, taxes, and expenses. Please visit our website at winthropwealth.com to learn more about our total net worth approach.